Hello there, everyone. I'm John Thanasoulis. I'm Professor of Financial Economics here at Warwick Business School, and I teach on the module on, as we call it, the Global Central Banking Qualification that we do in partnership with the Bank of England on the module on financial conduct, leadership and ethics. I teach with my colleague, Professor Dimitrios Spiridonidis, who's with me, and I'm also joined by Rob Collins, a technical specialist, a senior executive at the Bank of England, who has agreed very kindly to talk a little bit about the importance of ethics and the material that the module covers, and why it was that the Bank of England felt, when they worked with us to put together the module, why they felt it was important to cover topics like ethics, ethical leadership, and financial conduct. So I've got a few questions. Perhaps you could present or describe a little bit why you think an understanding of how ethical considerations can and should affect bankers' behavior is important for your colleagues at the Bank of England.
I think on this question, there's kind of two directions that I would look at this from. The first is what I do kind of day to day in my job, and the second is more about working here at the bank more generally. So I work in prudential regulation, which is one part of what the Bank of England does, and I'm a technical specialist in accountability, governance, and conduct. We developed about 6 years ago a flagship accountability regime called the Senior Managers and Certification Regime, and I specialize on that piece of policy. And one of the underlying intentions was to improve culture, governance, and kind of integrity within financial services by making individuals more accountable for their conduct and their competence. We don't necessarily use the term ethics in our policies and publications, but we do explicitly look at integrity and conduct through the regime. And our view is that culture at firms that we regulate includes its standards of behavior, and its business should be conducted in a way that's safe and sound. There's an argument to say also that if firms and individuals within the industry don't act ethically, that can develop into a reputational risk for those firms as well, and that can expose firms to potential losses. It's been noted before that the scale of misconduct through the financial crisis and subsequently prevalent in issues like libel rigging and FX scandals that impaired banks' ability to function fairly and effectively. And that has a kind of a knock-on effect on financial stability more generally. Separately, in my work here at the bank, those behaviors of honesty and integrity are key to how we work here at the organization. It's really a privilege to work here at the bank, and I really do mean that. Our work does come with a great deal of responsibility, though, and we do interact with information that may be confidential or sensitive. So it's important that we also display those behaviors, cultures, and values that we expect of the firms that we regulate.
So there's a lot there. Thank you, Rob. So to paraphrase a little bit, you first started saying how important it is that the banks and the financial institutions that the Bank of England regulates and helps oversee, it's so important that they have behaviors and therefore cultures which exhibit integrity, good conduct, what we might call ethical conduct, and so on. I think that's really, I can understand that. You and your colleagues have been very consistent in expressing that view, and it underpins a lot of the work that I teach on this particular module. So just to make the link, we spend a lot of the content of the module looking at what encourages ethical or in behavior of appropriate integrity, what market conditions put that at risk, what market conditions make it more likely to be true, when is professionalization of an industry like finance likely to help that? Would it be true in, for example, sellers of credit cards and or in sellers of bonds and over-the-counter derivatives? And the answers are different, and how the market forces affect the likely behaviors that we're going to see. That's key to what we do, and I think speaks to some of the material that you were just talking about. If you had to identify particular types of role in the Bank of England, or people who were most aware of the need for the financial sector to exhibit good behaviours, what sort of areas of the bank would you highlight? I mean, maybe your own.
Yeah, definitely my own and my team. I work on the governance, remuneration, and controls policy team. So our mission as a team really is to look at how behaviours in firms and risk taking within firms can ultimately feed into their safety and soundness. I think anywhere in the Prudential Regulation Authority, particularly the supervisory areas, so that's where individuals in the PRA actually supervise the entities that we regulate. They interact with senior individuals on a really regular basis, and they also observe behaviours, dynamics at firms. So for them, it's key to understand how behaviours, an underlying culture and conduct can ultimately feed into the safety and soundness of the firm that they're overseeing.
That brings us, I think, to what it means to behave and indeed to lead ethically.
It's really important that the people I work with embody the values of the bank and kind of the behaviors that we'd expect to see. I'm very lucky that the managers and leaders that I do work with and have worked with have done that. And it's made it a really, really great environment for me to thrive in my career. And I've tried to do the same when I've managed people as well. And that's really important to me, and it's really important to the bank more generally.
I think this is a fascinating topic by all means, and the starting point of our argument on this particular program is that people, we are by default supreme followers. We would like to follow others. And this is why it's important for leaders to exemplify ethical conduct. But then what we see in organizations is that this is really difficult to happen. So on this particular program, we ask, why is that? More importantly, we're also looking into how can we develop ethical leadership within organizations? And we're looking both at the role of individuals, how can we develop ethical leaders, as well as how do you develop a culture that embraces ethics on top of everything else. But we take the discussion even further away from ethics, and we're looking into the role of responsibility and the responsibility of leaders that have towards a broader set of stakeholders within and outside their organization. So we try to approach the role of ethics and ethical leadership from a number of different perspectives, implicating a number of different stakeholders, to offer our program members a more systematic understanding of what drives an ethical behavior and what organizations and their leaders can do to create a culture that can embrace good ethical conduct.
Rob, this ethical leadership that Dimitris has been talking about must get more and more important as you move higher up the hierarchy at the Bank of England. Is that true? And does the bank sort of endeavour to make sure that it practices what it preaches even at the highest levels?
I think so. The leaders that in my particular area I see as role models, and they do embody the values of the bank.
So just to finish off, and then perhaps Rob, you'd be kind enough to give us sort of a concrete example of when considerations to try and make sure that behaviours were appropriate in some of the firms that the Bank of England works with, that actions had the appropriate levels of integrity, and when that requirement led to a sort of a case, an actual change in some of the work that the bank did or the rules that it set. Could you give us an example like that?
I think the key one is the development of the senior managers and certification regime, which is a flagship policy. Within the overall regime, we explicitly call out that key individuals, in this case the chair and the CEO of firms, are expected to be responsible for the development of culture at the board level and in the firm. We also expect boards themselves to articulate and maintain a culture of risk awareness and ethical behaviour for the entire organisation in pursuit of its business goals. We expect that culture to be embedded with the use of appropriate incentives, so you can link that to remuneration, to encourage the behaviours the board wishes to see, and is intentionally set at that level, the board and the CEO, because the tone comes from the top, and
Yeah.
the individuals at the top of the organization set that culture and should embody that culture, and then it should filter down through the organization.
Fantastic. And indeed, we complement that in the module by actually looking at the CFA, the Chartered Financial Analyst, their code of conduct, which isn't obviously only aimed at people at the very top, but does also cover the sort of behaviors that you've been describing and how important they are. Look, Rob, Dimitrios, thank you very, very much indeed. It's lovely to sort of give people a bit of an insight into the module that Dimitrios and I teach together, and that Rob, you very kindly helped the Bank of England with in a professional context. And thank you all.